Hello and good morning, listeners. This is Almus Market Mornings with Shikhar Garg, your fresh brew of global financial updates. And we have yet another joinee. South Korean central bank was another central bank opting for a halt of interest rate hikes in this session, as the sentiments continue to stay mixed on inflation and the market participants confused about how to move ahead. Hedge funds have already increased their short positions to a decade high before the inflation and the jobs or the earnings report this week. While we have also observed the Bitcoin trading above $29,000, a new high for the calendar year. This has been quite a mixed set of updates for the market participants, but we've also had some clear statements from the Japanese governor, Mr. Ueda, who seems to be in no rush of abandoning the yield curve control. So, JK, what's your take on these kind of mixed sentiments?
Good morning. Actually, it was another holiday thin market yesterday due to Easter Monday, and very the sparse data was available for market to react. But we did see markets late reaction to the jobs report, which was published on Friday, and that was showing a reasonable growth in the job sector versus other leading indicators, which were actually weak. And then the market seemed to be reassessing Fed's expectations on May move after having almost priced in a pause earlier. Now it appears that 75% probability of hike of 0.25% in May is being discounted by the market. And adding to the reasonably strong employment report on Friday was the New York Fed survey showing consumers getting more pessimistic about inflation and access to credit. They expect prices to rise by a 0.5% point from 4.2 to 4.7 1 year forward, although the long-term inflation expectations are still subdued. And that's the first time the near-term outlook has increased since October, and runs counter to the narrative of Fed officials that they expect inflation to subside as the series of interest rate hikes take hold. While there was no other major data available, but Asian time has seen some improvement in the risk sentiment. Like Bank of Korea kept South Korean bank kept interest rates on hold as expected at 3.5%. This followed similar action by the Reserve Bank of India last week, and there was Chinese CPI, which came much lower than expected at 0.7%, and that means that China can have more room to ease policy. And also the Australian confidence data came better. So all in all, there was some sentiment boosting announcements or publications in Asian time, which was just keeping the stock markets also somewhat biddish. In fact, we also had a statement from Warren Buffett, whose statements are closely watched, that he's going to increase his stock investments in Japan, in the coming days as well. So we also had the World Bank upping its forecast for the global growth outlook slightly to 2% from 1.7% that was forecast in January. On the currencies, of course, yesterday we started with the current account in Japan improving substantially, and that led to yen trading almost close to 132. But as you mentioned, the dovish statements from Ueda, who seems to be no different from the previous Governor Kuroda, actually led to yen being thrashed across the board, and we saw almost 134 being hit on the dollar, and yen weakening across all other currencies. And probably that also had some effect on other currencies like euro and GBP, which all of them dipped in a correction. For now, they are looking to bounce because of the improved sentiment, but it's a very tentative market because we are seeing swings both in yields as well as stocks and currencies on small bit of news, and that really shows that there is no big hand which is guiding the market right now, and it's being led by traders, and so that kind of volatility is likely to persist until we get some large figures or large directional influence from any of the events. On the rupee also, we did see a sympathetic move on the weakness in rupee along with other Asian currencies, touching almost 82 after having seen a low of 81.77, which is a new low for this cycle. A short covering in dollar started after national banks made their appearance once again, and that's been the trend of several months, and we do see that sharp dips are being bought by the PSU banks and then followed up by importer buying as well. One news that could have influenced the rupee traders would have been the Skymet forecast that they expect monsoon to be below normal to the tune of 94% of the long period average. So nothing, in the absence of any other major data, these are the factors that markets have been looking at. But the data calendar thickens from tomorrow. We have the CPI data from US, which is expected to moderate, and then FOMC minutes later in the night tomorrow itself, and Friday we have the retail sales data. There has been some indications from the New York Fed survey that credit offtake, or rather the lending by the banks, have also substantially decreased in the week ending 31st March. And so this is one of the factors that Fed has been pointing out, that credit conditions tightening could lead to lower demand. So these are some things that we look forward to in the coming days, and possibly we have a directional move in the dollar and other market segments. Thank you.
Okay, JK, that was quite good. And yes, folks, as JK and the Fed chairman mentions, the reduction in the credit extension in its way is a natural tightener for the economy, which can, act against the inflation. But on the other hand, something which is quite interesting is the Chinese CPI being lower than the expected. This provides them with some room to, further ease the economy and stimulate the economy. On the other hand, yes, even our central bank has been quite active. They recently released new guidelines for outsourcing of IT services by the financial institutions. And also, we have been seeing appearances of the nationalized banks in the markets as the rupee appreciates. So all this is one thing, but folks, there's something even more interesting coming today. We have Mr. Maulik Shah, Mr. Pankaj Rathi, and Swaraj Rajgopal coming in for a very interesting session on the trade balances and what are the challenges that the Indian economy are facing. It's something which is quite interesting, as the data points have been dug deep to identify the overall trade balances and the balance of payments functioning. I believe it must be of good value, and we'll see you there, definitely having some good insights. Thank you so much for listening, and see you there.